Welcome to the Deep Dive. We're here to really unpack the key insights from corporate earnings calls. And today, we're diving into Interactive Brokers Group, that's IBKR, and their second quarter 2025 call. Our goal, as always, is to cut through the jargon and give you, the experienced investor, the stuff that really matters. Yeah. No reading from documents, just the core takeaways.
Yeah, and you really have to understand the market backdrop for this quarter. It was pretty wild. They called it a roller coaster in reverse on the call, which I thought was quite apt. You had that sharp drop in April, right? Then this slow, steady grind back up, actually surpassing the February peak by the end of June. And it's kept going up since then. So naturally, that kind of environment, it drove a big spike in trading volumes. We definitely saw that trend of investors, buying the dip every chance they got.
Okay, so volatile times.
Yeah.
And IBKR. Sounds like they didn't just navigate it, they thrived. Record results, headline stuff.
Oh, absolutely. Shattered records is the right way to put it, across multiple key areas.
Okay, so give us the highlights. What are the absolute standouts here?
Well, first off, commission revenue. Hit an all-time record, $516 million. That's up 27% from last year. And what's really interesting there is the nuance with the SEC fees. They dropped to zero mid-quarter. If that had been zero for the whole quarter, commissions would likely have been another, say, $15 million higher. So about 3% more on the total commission number.
Right, so that 27% jump isn't just market activity, it suggests something more. Market share gains, maybe?
Exactly. It strongly points towards them grabbing share, pulling in clients. It really validates their whole low-cost, high-efficiency model, especially when things get choppy.
Okay, what else? The NII.
Net interest income. Yeah, another record, $860 million. Now, that was mainly driven by higher cash balances from client segregated cash and strong securities lending. And this was despite benchmark rates actually falling in some key currencies, which is quite something. They did mention a one-off tax recovery credit, about $26 million. But even if you pull that out, you're still looking at $834 million. Still a record.
So commissions record, NII record, even without the one-off.
Right. And that feeds into total net revenue and pre-tax income, both records. Pre-tax income was over $1 billion for the third quarter straight.
Wow. And
the pre-tax profit margin, an incredible 75%. That's an industry leader and a record for them. Speaks volumes about their expense control.
75% margin.
Yeah.
Right. And the balance sheet, still solid.
Rock solid. Total assets jumped 33% to $181 billion. Firm equity up 22% to $18.5 billion. And crucially, no long-term debt. It's a fortress balance sheet.
Okay, those headline numbers are definitely impressive.
Yeah.
But let's get under the hood. This client growth sounds explosive. What's really driving it, and how are they managing it so well?
Yeah, the growth is pretty staggering. They added 250,000 net new accounts just in Q2. Think about that. Year to date, that's over 528,000 new accounts, which is actually more than they added in all of 2023.
More than all of last year already. Wow.
Yeah. And they're on track, they think, to hit 4 million customers sometime in Q3. That's only a year after they hit 3 million. The acceleration is real.
How are they handling that surge? Usually that means massive hiring, costs going up.
That's the key differentiator. Automation. Their application processing is highly automated, and they keep improving it so they can absorb these huge influxes of new accounts without needing a proportional increase in headcount or letting costs run wild.
Makes sense. What about client assets? Balances, equity.
Also hitting records. Client credit balances the cash clients hold reached $144 billion, up 34% year over year. And client equity climbed 34% too, hitting $664 billion. Now compare that. The S&P 500 was up about 11% in the quarter. IBKR client equity was up 16%.
So their clients outperform the market on average.
Seems that way, yeah. And that big jump in cash balances in June, it was a mix new deposits, people rebalancing portfolios, and probably some cash generated from that risk-off move back in April.
And all these new clients and assets are translating into activity, I assume.
Absolutely. Trading volumes were up across the board. Options up 24%, futures up 18%, stock shares up 31% year over year. Total customer DARTs, daily average revenue trades hit 3.66 million. That's a huge 49% jump from Q2 last year.
49% increase in DARTs.
Yeah.
That's massive. You mentioned their global client base earlier and their 245 trading.
Yeah.
How much is that overnight trading contributing now? Is it becoming a really core part of the story?
It really is. I mean, the growth there is phenomenal. Overnight volumes were up over 170% compared to Q2 last year.
170%.
Yeah. And it's not just a flashy number. For their global clients, it's crucial. U.S. overnight hours are daytime trading hours in Europe and Asia, right? So those clients can actually trade U.S. markets during their main business hours. It breaks down those old time zone walls. And IBKR offers a really wide range of products overnight, over 10,000 U.S. stocks and ETFs, index futures, options, global bonds. It's comprehensive. Management clearly thinks this is the future, that the lines between different trading sessions are just going to keep blurring. More and more trading happening around the clock.
Okay, so the global reach, the 245 access, it sounds like a strong advantage. But lots of brokers talk about going global. What makes IBKR's tech actually deliver this in a way that's, well, sustainable and gives them an edge?
It really comes down to two things: relentless automation and the sheer scale of their systems. Their core trading system, the ATS, is built for massive scale. They mentioned enhancing it to handle spikes up to 20 times normal volume on busy days. That ensures things keep running smoothly for you, the trader. And their smart order router, it's constantly being tweaked for best execution, trying to get you price improvement, maybe even rebates. That really matters to active, sophisticated clients.
So it's the underlying infrastructure.
It is, but it's also the philosophy. Automation is just baked into everything they do. And they mentioned judicious inclusion of artificial intelligence. Just in Q2, they pushed out thousands of software updates and configuration changes globally. Doing that constantly, reliably, in all these different regulated markets, that's the secret sauce for providing that global access effectively.
And are they adding new tools for clients on top of this robust backend?
Definitely. They highlighted a couple of new discovery tools. One is Forecast X. Think of it as a way to quickly analyze potential outcomes for various contracts across different markets, help speed up decision-making, and maybe even more interesting is investment themes. This tool helps you take broad market trends, say generative AI or nuclear energy, whatever's topical, and turn them into actionable trading ideas. Or you can just punch in a ticker and quickly get a deep dive profile on a company. It's all about making complex information more accessible and actionable faster.
Interesting. Okay, shifting gears slightly. What about digital assets, crypto? It's a space everyone's watching. How's IBKR playing it? And what's their view on what competitors are doing, like those stock token things?
Right, crypto. IBKR's approach seems, well, measured, but definitely moving forward. They invested in a crypto exchange called Zero Hash, and they participated in its latest funding round. What's coming next? They talked about enabling clients to fund accounts using stablecoins. That's pretty significant. Also allowing crypto asset transfers in and out, and introducing staking later this year. Geographically, they're focused on expanding crypto trading, especially in Europe.
Okay, so building out capabilities, but what about those competitor products, the stock tokens?
Yeah, this was quite pointed on the call. Milan, the CEO, didn't mince words. He basically said competitor offerings are fundamentally worse. He singled out Robinhood's European stock tokens, called them derivatives on about 200 symbols, meaning clients don't actually own the stock, they just hold a contract with Robinhood.
So counterparty risk, and you can't move them elsewhere.
Exactly, you can't transfer them. And he claimed they're way more expensive, like $10 for every $10,000 invested versus maybe $1 for the real US shares via IBKR. Then he mentioned Kraken X shares, said they're about 60 tokens backed by underlying assets, but they have creation and redemption fees, plus a management fee. And while you can withdraw those to your own wallet, he cited Wall Street Journal reports about, quote, very significant price differences and wild dislocation.
Dislocation, like the token price being way off the actual stock price.
Yeah, he mentioned examples like Amazon tokens trading at 4 times, even 100 times the actual stock price because there's just no liquidity. Crazy stuff. Yeah. So management's conclusion, stock tokens right now are a great opportunity to do much worse than buying an ordinary share. Really hammers home IBKR's focus on direct, low-cost ownership of the actual asset.
That's a pretty strong stance.
Yeah.
Okay, so they're clearly confident in their model. How are they deploying capital, returning value to shareholders after this strong performance?
Well, they did that 4-for-1 stock split back in June. That makes the shares seem more accessible, psychologically at least. And they confirmed the previously announced dividend increase. It went from $1 annually to $1.28. That's $32 per quarter on the new split-adjusted basis. A nice bump.
Any talk of M&A, acquisitions?
They said they're always looking, but finding good opportunities at reasonable prices is tough right now. Valuations are high. So for the time being, their preferred way to return capital is just paying it out through dividends. Seems prudent.
Okay, so let's tie this all together. From an investor's viewpoint, looking ahead, what are the big strategic implications? How sensitive are they to, say, interest rates?
Good question. Interest rates are definitely a factor for their net interest margin, their NIM. They estimate that a 25 basis point drop in the Fed funds rate could knock about $73 million off their annual NII. A full 1% drop across all benchmark rates. That's more like $335 million.
So rate cuts would hurt NII.
They would. But here's their strategy. They're keeping their treasury investments super short term. Average duration is less than 30 days. Why? Because the US dollar yield curve is inverted. Short-term rates are higher than long-term. So they can actually earn more right now by staying short. Plus, it gives them flexibility in this, uncertain economic climate. They can adapt quickly if rates move unexpectedly.
Smart. So even though rates fell over the last year, their NII actually went up.
That's right. Despite U.S. rates falling about 1% in the past year, their annualized NII actually increased by $225 million. Why? Because those client cash balances grew so much. The volume offset the rate pressure.
Interesting. What about securities lending? You mentioned that was strong.
Yeah, it had a better quarter, mainly driven by more hard-to-borrow names popping up. These are stocks that short sellers really want, but they're scarce, so the lending fees go up. It suggests specific pockets of bearishness or maybe special situations in the market. IPO and M&A activity, which can sometimes boost lending, are up a bit, but haven't really moved the needle much for the broader lending market yet. But IBKR keeps growing the total dollar value of securities they lend out. It's a steady contributor for them.
And the overall outlook from management, particularly Thomas Peterfy, the founder, still bullish.
Very bullish. Thomas specifically said he expects the market rally to continue for another 2 or 3 years. Obviously, that's great news for any brokerage, but especially IBKR given their leverage to activity. He also hammered home that long-term trend, more people investing globally across different asset classes from all over the world. And that's where IBKR sees its sweet spot, offering that global access with a much lower cost structure and, frankly, a much wider range of products and tools than most competitors.
And are they seeing that reflected in partnerships? Like introducing brokers?
Yeah, the pipeline for introducing brokers sounds really strong. It's diverse too, new fintechs entering the market, established firms wanting to add more products for their clients, even some firms apparently coming back to IBKR after trying competitors or trying to build systems themselves.
Coming back, that says a lot.
It does. It suggests maybe the grass wasn't greener or building it yourself is harder and more expensive than it looks. They also mentioned, interestingly, that a more friendly regulatory environment, potentially from a new administration, is influencing their crypto strategy. Basically, they feel they need to offer crypto because clients expect it, and the environment might be becoming more accommodating.
Okay, fascinating context. Right, let's move to our final segment. And just to remind everyone listening, this is purely for entertainment, maybe sparking some ideas. It is absolutely not financial advice.
Definitely not advice. Okay, so my outrageous but plausible trade idea, based on everything we've heard, I'm calling it the global low-cost broker arbitrage. The idea is pretty simple. Go long, IBKR. The core thesis is that the market still hasn't fully grasped the power of their competitive advantages. The relentless automation, the true global reach, those rock-bottom costs, those 245 access. It's a powerful combo.
Okay, long IBKR. What's the other side of the arbitrage?
The other side would be to short, perhaps, a legacy broker or maybe one of the newer fintechs that's clearly struggling to expand globally, struggling to automate their backend efficiently, or finding it hard to compete on price while still offering direct ownership of assets, not just derivatives or tokens.
So betting on IBKR's model winning out over others, what makes it outrageous?
The outrageous part isn't the basic idea. It's betting on the speed of recognition. Betting that global investors, both retail and institutional, will wake up quickly to just how much better and cheaper the IBKR platform is compared to fragmented, high-cost alternatives or those derivative-based products we talked about, especially as regulations evolve, potentially favoring direct ownership, like maybe in crypto down the line. That whole critique of stock tokens, it highlights a fundamental weakness in some competitor models that IBKR, with its direct, cheap access, could really exploit. So it's not just a bet on the market going up, it's a bet on a structural shift in how people invest globally, a shift towards the model IBKR has already perfected years ahead of many others.
Interesting angle. A bet on the speed of convergence towards their model. Definitely food for thought. All right, so let's quickly wrap up our deep dive on Interactive Brokers Q2 2025 call. Key takeaways. Truly record-breaking financials, really stunning client growth, powered by that deep automation and their unique global round-the-clock platform, plus ongoing innovation in tools and products.
Yeah, the competitive moat seems pretty clear. Low costs, broad product suite, that global 245 access, It puts them in a really strong position, especially if that trend towards global, always-on trading continues, and management certainly sounds confident about the long term.
Absolutely. So again, please remember, everything we discussed today is for informational purposes. It's not financial advice. Use these insights as part of your own research, connect the dots, and form your own conclusions.
And we'd love to hear from you. What stood out? Any questions sparked by this discussion? Let us know what you'd like us to dig into next time.
Thanks for joining us on the Deep Dive. We'll catch you on the next one.